Hello, hello, hello. Welcome to Al Stock Trades. Mic check 1, 2, 3. How's everyone doing today? Thank you for joining us. This is a live for AMC. It's been a while since we've done a video like such. Just excuse me one moment. Let me just go ahead and turn off something real quick. Alrighty here. Thank you for joining me for this video. Sorry for the little interruption here. This is an important video. Unfortunately, there's been a lot of people on the AMC YouTube space that know nothing about finance. Even if they have so many subscribers, they're saying some false things that unfortunately are not correct. I'm not going to call them out as I don't want any issues, but it's unfortunate because a lot of people are getting screwed over, right? So I'm getting a lot of comments, and a lot of these videos are basically saying, AMC doesn't need to dilute shareholders. AMC can basically be able to pay off their debts. Now that's false, and I'm going to prove this to you by looking at their balance sheet. And I hope you understand what this is. There's some people invested in this company and don't even know what this is, but this video is going to have a lot in it. So just buckle up and let's just get started, okay? So very quickly here, AMC's down 18% today. In 5 days, down 30%. A month, down 56%. 6 months, 59%. And year to date, it's negative 35%. But overall, it is down. So a lot of folks are basically saying that AMC can basically pay off their short-term debts. Now, we're going to go ahead and basically prove that this is not correct by looking at their total assets. Right now, they have $8.6 billion in assets in terms of movie theater chains and property, plants, and equipment. They have around $5.3 billion, and then goodwill and tangible assets that are going to be essentially marked down, that are going to be coming back into the cash value is the way the accounting principles work here. But if you just very quickly, I don't want to confuse, ignore all of this, okay? Ignore the accounting 101 that you learn. I just want you to focus on the assets here, okay? If you look at the assets are $8.6 billion, okay? Now look at the total liabilities. Just look at before you look at the red, just look at the pink. The total liabilities is $11.2 billion, okay? Ladies and gentlemen, they only have $8.6 billion in assets, and they have $11.2 billion in liabilities. They owe more to people than they own movie theater chains. So what are you going to do? Are you going to have them sell their movie theater chains $5 billion worth? Even if they do that, they can't even pay off their $11.2 billion in debt. Okay. And so that's one big argument there in terms of their debt structure. An argument could be, well, they don't have to dilute shareholders. They can just go ahead and refinance. The problem is, if you refinance, the issue that lies is that there's high interest rates right now. There's incredibly high interest rates, and those payments are going to be much higher than what most likely they're paying off of the debt right now. And if you just don't believe me, just look at the interest rates and the housing of how much a house costs. A $500,000 home costs now at a 7.49% interest rate versus when the interest rates 2-3 years ago were around 2.5, 2.2%. Again, my videos are not flashy. I'm not going to have flashy things pop up, little things come up here and pop up. Accounting is boring. Again, I can make it fun for you, but again, that'll take me a long time, and I'm not trying to make money off of YouTube. My name is Albert Allen. You can Google me. I'm going to become a medical doctor. I don't need YouTube to sustain my living, right? But the people in which you are watching, the people in which are on AMC that are continuously, there's this guy who's like, this is not financial advice. Buy AMC. I'm still waiting for the squeeze. They're doing that on purpose. They're leading these AMC people to continuously watch this bullshit so they get paid YouTube ad revenue because these people are lowlifes, okay? And it's sad because, if you look at the pink boxes, it just right there should tell you AMC's in deep shit, okay? Now, let's go ahead and take a look at total current assets. Okay, total current assets. This is what they owe right now. So someone can say, "Well, Al, total current assets and total current liabilities in terms of this is what they owe right now. That's a lot smaller than 11 billion." But listen, they have $700 million or $707 million in total current assets. Their total current liabilities is 1.5 billion. Even within the next 12 months, AMC could become insolvent. There's a reason why they're diluting shareholders. So when someone comes to you on the YouTube and they say, "Oh, I believe AMC could they don't need to dilute shareholders. They could survive. They're just doing this because they're bad management." This person, they have over hundreds of thousands of subscribers, and it's unfortunate. Like it's so sad. Like this person doesn't know what they're talking about, and it's so sad that people just don't know, right? And if you don't believe me, just Google or just ask ChatGPT. Do something. Ask, what happens when liabilities are greater than assets? Okay. Now, let's go next. This is called current ratio. When you look at the current assets over current liabilities, the number that you want is above 1.5, right? Historically, if it's above 1, that's fine. AMC is literally right now at 0.46. They have, for every the way you read this is for every 46 cents on the dollar, for every dollar they make, 46% of it goes to debt, pretty much, right? And that's just for their short term. Current ratio is for the 12 months, right? And it's just a shame. I'm getting a comment here. Go ahead, Al. Tell them about how the narrative is also false about being free cash flow positive. Yeah, I need to definitely look at the free cash flow positivity and take a look at this. But just overall, before I confuse these people, because these people have been led astray, if you look at the total current assets and total current liabilities and just total assets and total liabilities, AMC's in deep shit. Now, what's going to happen? Well, obviously, I'm seeing Ken Griffin here. He recently purchased some shares of Clover. Again, as the stock short squeezed, the buy button was removed from AMC. And it's interesting because they only were allowed to sell. So it's interesting how it happened up here. He was able to get out of his position. And now he's, I guess, repurchasing back at a lower end. Ken Griffin, which you guys, retail investors know who this guy is. But the point that I'm trying to make, and again, I'm sorry this video is not flashy. It's boring. There's numbers. It's accounting. But again, that's what business is, guys, right? So I'm going to say this to you guys clear, okay? Because I've heard this. Watch my first AMC video, right? Watch my, there's a little trash bag. There's a little trash dumpster fire. My first AMC video, right? I'm going to say this to you guys straight, okay? Was AMC a short squeeze play? Yes. Okay. What is there corruption in Wall Street? Of course, right? But again, there are opportunities in the market. People that got in at around in 2020, 2021, they got in at a very low price. They sold out a long time ago. They're gone. And if you held and now are still holding, I'm sorry. You got fucked by the game. Okay? You got fucked by the Wall Street game. And guess what? You got fucked by the retail game. This is a game, okay? This is the unfortunate part. You guys got screwed over. There was another prominent YouTuber that was all AMC heavy. Where is he now? Deleted his videos. Where is he? The rug has been pulled, okay? So it's unfortunate. This is the reality of things. People that got in early and they sold out when the stock price, when they 20, 30, 40, 50, 60, 100x their money, they're long gone. They're enjoying their life. The people that you're seeing on YouTube are the bottom feeders that are continuously pumping videos to act like, you know, what's it called? Roaring kitty, right? Deep effing value. They're trying to be like that person, and they're squeezing every possible video. They're squeezing it, and you guys are continuously watching it, and they're getting paid while you're just basically wasting your time. And the time that you spent wasting it, you could have learned about fundamental analysis. You could have learned about how to read a balance sheet. You could have learned that NVIDIA is an amazing play, and you could have forexed your money in NVIDIA or Carvana in terms of looking at the short squeeze there. You guys got screwed over. You got lied to. You got manipulated. And unfortunately, you can go about this two ways. You can point the finger, which is what this other YouTuber says. Oh, it's management's fault. They don't have to dilute. Yes, they do. They owe more debt than they have assets. Like, let me give you an example right now. I have a $7 billion property. Okay. But on my effing credit card, I have $13 billion in credit card debt. Okay. And my payments for these debts are coming up close. And the interest rates are even higher than the ones that I'm paying now. AMC is underwater. They need to dilute shareholders. They're going to dilute them to the ground. And there's going to be people that are going to basically say, I'm still hopeful for a squeeze. I'm still hopeful for a squeeze. A squeeze could come, yes, but at what cost? Okay, at what cost? Okay. So I hope this video made sense. If someone tells you that they don't need to dilute, tell them, do you know what current ratio means? Do you know what an asset and liability stacked against each other means? Have you even looked at the most current assets and liabilities? Sometimes you have to think to yourself and ask yourself, why is this person on YouTube? I gave you my name, Albert Allen. Look me up. You can basically see who I am. I have 4 degrees. My 5th degree is going to be a medical doctor, an MD. I'm going to be a physician. I don't need YouTube. I'm doing this because I love to teach. And you can look at my track record in terms of, you know, I've been teaching for the past 10, you know, I built my own tutoring program when I was young. I've been teaching for such a long time, right? But you have to ask yourself, what is the goal of these people, right? And hopefully you can take this as a learning lesson. There are going to be some people that are going to say the stock market's a scam. It's not for me. I'm done. Their loss. It's their stupidity and ignorance that they didn't realize there is an opportunity. But if you actually understand the numbers, you'll win over people that don't. All right. So let me go ahead and look over the comments, and then we'll close off the video. 100% FN. It's sad seeing these people say MOAS. Exactly. Fake news. I assume that's what you're saying, even now. Yeah, well, Keith, Michael, they are about to get disappointed when they reverse split and dilute AMC even further to raise cash while it's being shorted back down. Yeah. What about the revenue? Will it help at all? I'm actually short selling puts. You're actually short. Well, I mean, yeah. I mean, I'm sure it's a great opportunity now to short AMC. But assets and liabilities, guys. It's all about assets and liabilities. I would need to look at their cash and how much cash they have on hand. And we have it here. It's all in the sheet here. They have a cash and cash equivalents of $458 million. That's nothing, guys. They cannot pay off their debt. That is nothing. They are screwed. Screwed. They need to raise so many millions of dollars of cash, billions, just to pay off this total current liability, right? All right, let's see here. How low do you think ape will go? Again, I don't have a crystal ball. We can calculate the intrinsic value, but why am I going to do it in such, I'm not going to calculate the value of a piece of trash that's outside, right? It's so there's no point, right? There is a way to calculate a value for a stock. It's called an intrinsic value calculation. And, you can learn about it. I'll give you a little bone here. DCF calculation, give you a nice image on what it looks like. But overall, if you look at the future free cash flows, you can extend it into the future and discount back at a 10-15% discount rate to actually find the value of a company. And you can sum up all those values. This is what they teach, right? And then, you can find the value of a company. But there's no reason to do it because, they owe a lot of debt, right? All right. Revenues increased. No, yeah, I get that. They have increased. They're improving their margins. But not as fast as they anticipated. Become AMC shares in 2 days. Yeah. And I don't know if it's going to be a 1-to-1 or 10-to-1. We'll see. Just because it's an opportunity doesn't mean it's not a scam. I don't know what you're referencing. Our bullseye alert has been calling for AMC $4 put several days in a row within the market open. Yeah. So it looks like the AI we have on our stock terminal is pretty much saying this shit's about to go down. And yeah, and it has. And it has. Let's take a look. Let's take a look, sees. Let's go to, was it, you said bullseye? So let's go to our bullseye. Where the hell is the bullseye? The bullseye here. You said right here. Yeah. Today, AMC, it's a put. You want to buy it. So it's expecting to go down. But let's do one better. Let's actually search the bullseye channel here. By the way, we have a free trial for this if you want to see it. It's link down below. AMC. Let's take a look at this. So these are. Let's take a look. So today we got a put. Yesterday we got a put with a 72% AI confidence level. A 72 effing percent. Holy shit. Right. And then I'm sorry. You should have told me this, Irish. I've been very busy, my academics, writing a book and all the stuff I've been doing with the Mastering Stock Market course. August 17, which was literally a couple days ago, we had, buy a put. This shit's about to drop. August 17. You don't believe me? It's right here. Right. Let me take a look at more. Is there more? August 16 put. August 15 AMC put. Holy shit. August 14 put. August 10 put. And I'm sure it gave you other stocks that are going to go up too. August 9. Yeah, this thing was August 9 put. August 7. July 28 put. 27 put. Short it. I mean, it goes, when does it stop? Oh, here it is right here. So July 12 was the first put. So let's look at July 12 here. Let's see here. July 12, it went up a little bit, and then July 12 right here. Right? Let me make sure. Yeah, July 12. Holy shit. Down 42% from the first AI put signal. That is insane. Insane in the membrane. All right. So again, I'm sorry. There's people down. I'm sorry. This is the game of Wall Street. There are winners and losers. It's a zero-sum game. Again, there's education that will help you try to increase your probability of not being a loser. Intelligent Investor and Security Analysis, both by Benjamin Graham. I'm really sorry for this. Again, if someone's telling you, oh, AMC doesn't need to dilute, AMC doesn't need to, that's bullshit, right? Look at the assets, look at the liabilities, just look at those, stack those on. You'll see the truth. Okay. All right. Love each and every one of you. God bless you. And I'll see you on the next one.